Crypto feels heavy right now. Prices have struggled. The Clarity Act remains in limbo. Retail investors are losing patience. And every day, it seems like someone is asking the same question. Did I miss it? But here's something we're thinking about. The best opportunities rarely feel obvious while you're living through them. In fact, some of the most profitable investments in history look like mistakes before they look like genius. Today we're going to look past the daily price action and examine what's actually happening beneath the surface. Because while fear has taken over the conversation, the infrastructure keeps expanding. Whales keep accumulating, institutions keep allocating capital, and the financial system keeps moving toward blockchain technology. Let's break it all down. Nothing in this video is financial advice. Always do your own research before making any investment decisions. Welcome back to Ledger Pulse. One thing I've learned from watching this industry over the years is that markets are emotional. When prices rise, everyone suddenly becomes an expert. When prices fall, people begin questioning whether crypto has a future at all. But if you separate price from progress, the picture starts looking very different. Let's start with what smart money appears to be doing. Recent wallet data is showing us something here. Large XRP holders have continued increasing their positions while many small investors have been selling into weakness. Again, that doesn't guarantee price immediately moves higher. Whales can be wrong too. But historically, large investors tend to accumulate when everyone else becomes discouraged, not after headlines become overwhelmingly bullish. This isn't unique to crypto. It's how investing has worked for generations. The public often wants confirmation. Professionals usually want value. That's an important distinction. When markets become uncomfortable, investors begin to focus on risk. Long-term investors often begin focusing on opportunity. Glassnode recently pointed out that Bitcoin's futures basis is beginning to resemble conditions seen around the 2022 cycle low. Nobody should interpret that as a prediction. History never repeats perfectly, but markets do often rhyme. When sentiment reaches pessimistic extremes, while structural indicators begin improving, those periods deserve attention. Not because they're guaranteed bottoms, but because they're periods where risk and reward begin changing. The market usually doesn't ring a bell before momentum returns. One comment this week stood out. Executives at SBI Holdings explained that XRP's recent weakness may simply reflect uncertainty around the Clarity Act. That's important. Notice what they didn't say. They didn't argue blockchain had failed or suggest that institutions were abandoning digital assets. Instead, they pointed toward uncertainty. Markets hate uncertainty. Investors postpone decisions. Capital waits. That's exactly why legislation matters so much. There's been a lot of confusion surrounding the Clarity Act. Some reports suggested negotiations are making progress. Others confirm no Senate vote is currently scheduled before recess. That uncertainty has frustrated investors, but it also highlights something very encouraging. As I've been saying for a while now, crypto is no longer being ignored. Washington isn't debating whether digital assets should exist. It's debating how they'll fit into the financial system. Again, that's a very different conversation than we were having just a few years ago. Former Coinbase Chief Policy Officer Faryar Shahzad recently argued that many banks are embracing crypto while at the same time pushing against it. Whether legislation arrives this week or several months from now, the conversation keeps moving forward. And here we see from BankXRP, former CFTC Chairman Chris Giancarlo on why some in Washington are fighting crypto so hard. He was arguing that Dodd-Frank gave Washington a political say in how capital gets allocated. Crypto removes that entirely, just algorithms with no political filter. He says that's exactly why some see crypto as a threat to the power that they've gained. At the same time, former Barclays CEO Bob Diamond said regulatory clarity could help unlock around-the-clock trading, instant settlement, and permanent transaction records at dramatically lower costs. Notice the pattern. These aren't crypto influencers making the case. These are longtime leaders within traditional finance. The discussion has evolved. It's becoming less about speculation and more about modernizing financial infrastructure. That's a huge shift. One analyst recently asked a simple question. Is the suffering over? Nobody knows. Maybe it is. Maybe there'll be another leg lower. Nobody can answer that with certainty. But here's something history does tell us. The moments when investing feels easiest usually aren't the moments producing the best long-term returns. Those opportunities tend to appear when uncertainty is high, when confidence is low, when people are becoming convinced that nothing is happening. Ironically, that's often when the foundation is quietly being built. One mistake newer investors often make is believing success comes from finding the perfect entry. In reality, many successful investors simply accumulated consistently during periods when nobody else wanted to. That doesn't require predicting bottoms. It just requires accepting that markets are emotional. If blockchain adoption continues expanding over the next decade, then today's prices may eventually look very different in hindsight. Nobody knows exactly when that shift happens, but by the time everyone feels comfortable buying again, the opportunity usually looks much smaller. Markets don't reward certainty. They usually reward patience. Today's headlines are filled with delays, uncertainty, and frustration. Yet beneath all that, institutions continue building. Large holders continue accumulating. Traditional finance continues preparing for blockchain-based infrastructure. Again, that doesn't guarantee higher prices tomorrow, but it does suggest the long-term story continues moving forward. Sometimes the hardest markets to stay invested in become the ones people later wish they'd appreciated more. If you enjoyed today's breakdown, let me know your thoughts in the comments. Do you think this is an accumulation phase, or do you believe more downside is ahead? If you found value in today's episode, be sure to like the video, subscribe to Ledger Pulse, and turn on notifications so you don't miss future updates. Thanks for listening, and we'll see you in the next one.